was in one of Sean Callaghan's events recently, and I had him as a keynote speaker at our last Law Firm Growth Summit. And he had somebody on stage, and the person was giving their elevator pitch. And then when finished, he had the audience rate the person, was it a 1, 2, or 3? And he told us what they were worth, right? And you clap if it's a 1, clap if it's a 2, clap if it's a 3. And then he gave some input to the person on how he could improve it. And then he did it again. And then he did it again, right? And each time he rated better and better and better. And by the time that he was done, he was pretty close to being all 3s. Maybe there was still some 2 laggards, right? And then he said, this just proves that when you measure something, you can improve it, right? And that's like, to your point, like when something is measured, when you have a number to look at, and this is what in our fractional CFO side of our business, the entire work that we do is helping our clients to identify the right things to measure, to give their team KPIs so that they can understand how they're doing. And everything is about just getting people to improve their KPIs, because ultimately that's going to drive the direction of what you want. In Profit First, the book by Mike Michalowicz, he introduces this concept of bank balance accounting. Most business owners operate with bank balance accounting. I wake up in the morning and I check my bank account. If it's got money, we go spend it. If it doesn't have money, we don't go spend it. If we know we have to make payroll tomorrow, then all of a sudden we're like, oh my gosh, who can we call to collect and have somebody pay an invoice, right? That is no way to run a business. And what Emil is trying to tell us is, like, if you know your numbers, we can get away from this bank balance accounting behavior. We can get to a place where we are doing things on clockwork and a schedule, and have that money coming in constantly, and then be making choices about what to do with that money, not based on what's in the bank account, which is false, right? What's in the bank account doesn't tell you what bills are coming up, what checks are outstanding, what taxes haven't been paid. That's a big one. Like, people, especially in their first year of business, if they're successful, right? You make $100,000. Nobody told you that you weren't paying taxes on that. And all of a sudden, you have a $30,000, $40,000 tax bill. $30,000 to $40,000. You thought you made $100,000, but no, you didn't. But the money's gone. You spent it already. So now you're in trouble with the IRS in whatever state you live in, because you can't pay your tax bill, and you got to go on a payment plan. And thus the vicious cycle of owing taxes begins for the entrepreneur, right? If you're lucky and you lose money in the first year, then you don't get that. But then you also don't get the lesson, and therefore you'll make the mistake in year 2 or year 3. You got to have somebody like Emil in your corner, right? But more importantly, when we go back to what he was talking about, it all starts with having good practices in not just the tracking of the numbers, but the generation of the numbers. And I love where you went with the billing. The Clio Legal Trends Report is a gold mine for understanding what you should be doing in your firm, or how you should be doing things differently. In a previous report, I think it was 2022 or 2021, they did a whole study on discounting. They made the case for the fact that firms, rather than charging a higher hourly rate and then discounting behind it, should just charge a lower rate and not do discounting. What is discounting? Discounting is when I'm about to do my billing cycle and I look through the time entries and I say, oh, this shouldn't have taken 3 hours. I'm only going to bill 2 hours. This shouldn't have taken 7 hours. I'm only going to bill 5. This phone call should have been free. I'm not even going to bill for it, right? And basically shortchanging yourself on the work that you actually did that you're not even billing the client for. Then you send the bill to the client, and the client calls back and says, oh my goodness, I can't afford to pay this. This is way too high. Why did we spend 5 hours on this? Why? And then all of a sudden you're like, okay, how about if I lower your bill by 15%? Just to get paid, right? By the time we're done, what Clio found in their study, and this is not like they didn't make up the numbers, they went and they researched thousands of firms. I think it was 2,000 firms that they researched, and what they found is that the significant drop in the actual input of time that went into the work and the actual amount that was collected was so significant that somebody who was charging $450 an hour ended up collecting $285 an hour. So their argument was, if you would have just said your rate was $285 an hour, you would have got a lot more clients saying yes on the front end. You would have been undercutting the competition, And if you just didn't discount, you would be in the same boat you are today. Now, I argue, don't lower your price, stop discounting, and then you'll be in an even better position, right? But the point is that having a good practice around your billing, taking you out of the equation so that you're not emotionally making decisions around the billing and the collections is golden. And the fact that Emil and his team get involved in that process is huge.
That's a great point, Moshe. Typically, lawyers and accountants and professionals are advisors, right? You're helping your client, you're whatever you're doing for your clients, and they don't feel good going back and charging their client because, oh, this is my friend, this is my client, I'm their advisor. So that's I think that's one of the reasons why they feel bad about billing and reducing their at the end of the day they're reducing your bills. In the same study that you were referring to, Cleo mentioned or stated, the study mentions that only roughly 2 out of 8 hours of an attorney's time is billable time. So just let's think about that. You work 8 hours a day and you only bill 2 hours. And out of those 2 hours, you don't even collect 2 hours. I think you collect 1.7 or 1.8 of those hours.
1.8. Yeah, it was 2.1 hours. Solo attorneys bill 2.1 hours a day and they collect 1.8.
Out of 8 hours. It's mind-blowing. Like, how you're supposed to make more money as a business owner than as an employee. You can't. That's why you're getting into this rat hole of working 80 hours, not making enough money, cannot go to your kids' soccer games or taking vacations. I think that's why solo and small firms will really benefit from your services here, Moshe, with the law firm growth.